Dude, Tim Bratz, super excited to meet you. Welcome to the Capital Raiser Show, man. How are you doing?
I'm excited to be here, Ruben. Thanks for having me, man.
Yeah, man. Thank you. Thank you so much. All right. So, man, I don't even know where to start with you because I've been following you for so long. So, the show's about raising capital. I like to talk about
Mhm.
mindset. I went over a couple things that I was interested about. I think a lot of my listeners probably already know something about you, but some don't, which I think is kind of shocking. They're like, somebody asked me for a referral for a podcast. I'm like, you should have Tim Bratz on there. They're like, who? I'm like, Tim Bratz. You don't know Tim Bratz? Are you kidding me? He's like one of the biggest like guru status individuals in the multifamily syndication. Let me ask you this and start off with this. So I know that you're in multifamily. How much of your business is multifamily syndication versus joint venture?
Um, so define those two things for me.
Okay,
When it-
so joint venture is when, and I guess it could go into gray areas,
what
but
what is your definition of those two?
so a joint venture would be where you take money from maybe one or two partners who are active investors, whereas a syndication, I think a lot of people would be as soon as you start crossing into the securities realm, where
Mhm.
somebody is becoming passive and just giving you your money without having any active role in it. That's what I would define as syndication.
Yeah, we exclusively do syndications.
Okay, cool.
So there's not many active operators that we work with. I mean, we joint venture with other active operators. We bring in people. That's how we've been able to scale our business significantly. We're really good at the administrative side, the property management side, the asset management side, the fundraising side. I have a big balance sheet where I can sponsor loans. But really, the bottleneck in this industry is boots on the ground and project management, right? And so what we've done is we partnered up with a lot of great operators, great project managers, and construction managers that we work with. Instead of making a margin or a markup on the project, we give them a little bit of equity in the deal instead. And so it's a sweet deal for them. They can start building some real wealth. Sweet deal for us because we can do far more deals and, again, have that bottleneck of having boots on the ground and having our own employees and having a bunch of overhead and all those kinds of things that we didn't want to do. So we do joint ventures in that capacity. But from a money raising standpoint, which I know your show's all about, we almost exclusive, like there's not many of our private lenders and investors who want to be active. They're just passive investors. They have a great traditional business, they're making money and they want to focus on that. They just want to park it somewhere where they can make great return and have some equity upside.
So a couple of people have caught me off guard recently where they've said, hey man, so we like your show. You seem to be surrounded by a lot of syndicators. We're not too familiar with syndication. We do private equity placement. So they get their money from one dude that writes a check that is passive, right? Or one institution. Do
Mm-hmm.
you deal with any of that type of money?
No, I don't really work with larger hedge funds or REITs or family offices unless it's like an individual who just sold their business and he's got his own kind of family office. He's got $100 million of his own money, but I'm usually working with that individual, right? If it's been a bunch of money passed down and there's all sorts of attorneys and CPAs involved and a lot of that kind of stuff, more times than not, they put you in a chokehold and they have you in
Yeah.
a headlock. It's not good for business when they just have like in a chokehold the entire time, and it actually puts the project in more risk, more of a risky position than otherwise because you're filling out so much paperwork that it's taking you away from actually doing the work of turning and stabilizing this asset. So it's so much of a headache. You're always worried about them just kind of burning you, and it's not a good relationship. I'd rather be in the same boat, rowing in the same direction with people where our visions are aligned, our goals are aligned. And that's why we work with primarily, individuals. Somebody who's got a bunch of money in a 401k, somebody who's got some money in an IRA, somebody who's got some cash laying around, they saved it up over time, or a business owner who sold their business, launched a product, had a big influx of cash, they make some money and they're just looking to passively invest it somewhere. So that's typically who we work with.
Yeah, it can be scary to go in that direction with even just a whale investor or, these institutions, they can put you in a bind. Well, number one, they want a preferred treatment, right? So they want more than what you could probably give. They want you to lower your fees. They want a preferred status. And then if they're writing the one check, when you get to closing, if they change the terms, they could just back out. And then if you don't have certain things in place, like have them, with some money on the line to lose, that, I mean, it can be a tricky, precarious situation. That's cool.
Yeah.
Tell me about with your investors, I'm curious about your business model. Do you have them stay in the deal, into perpetuity? Is any of your deals, any of the stuff that you do, like, is your intention to hold it forever? Are you in a specific business model where you're, trying to refinance in between year 3 and 5 so that they can get the most cost segregation and bonus depreciation and maximized internal rate of return, or does that matter? Tell me more about what kind of assets you like to invest in, how you pay back your investors.
Yeah, man, I think that's a great question. And let me give you a little bit of history of kind of where I come from. I graduated from college in 2007 and got into real estate as a real estate agent, right? And so I see a commercial real estate agent, and I saw these landlords, renting out retail space and office space and all these apartments in their buildings, making all this passive and residual income. And I'm thinking, I need to be on that side of the coin,
Right.
not brokering real estate. And so I got involved from a single family perspective originally. And so in 2009, I bought my first single family house. After working in real estate for several years prior to that, I actually got into the investment side in 2009. And I spent about 3, maybe 4 years in just the single family side, fixing and flipping houses, wholesaling houses, building up a small single family rental portfolio. And then I bought my first apartment building in December of 2012. That was an 8-unit building in Cleveland, Ohio. And I liked apartments because it just aligned more with what my goals and what my ambitions were. It had more scale. It was easier to finance, easier to fund, easier to manage. You're going to 1 location instead of 10 locations. That's when I started focusing really, really heavily on multifamily. My point is, I never took a class. I never went to a seminar. I never read a book on commercial real estate syndication or putting this stuff together. So I think of this stuff at a 3rd grade level. You've already said a bunch of things that are way over my head because I've never
Awesome.
been formally educated on this stuff, right? And so I just took a simple method, the BRRRR method in single family. It's called buy, renovate, rent, refinance, repeat, right? And all it is you buy a house, you fix it all up, you put a good tenant in place, put good management in place, then you go back to the bank, and now that house that you're into for $60,000 is now worth $100,000, and they gave you a $70,000 loan. You pay back your investors, you have a long-term loan in place, you go and do it again, do it again, do it again. I took that exact same model and I just duplicated that in multifamily, and I've duplicated it over and over and over again. So what we do is we buy an apartment building, and we're usually all in, again, at the same kind of equation as what I was buying single family houses at. So we need to be able to buy and renovate an apartment building and be all in for less than 65% of that stabilized value, the after repair value. So when we get into an apartment building, our entire goal is to then stabilize it, refinance it within 12 to 24 months, is as long as our investors have their money in. And so that allows us to then turn around, get a new loan. So instead of $100,000, we're talking about a $10 million building. So our new loan amounts $7 million. We're all in for 6.5. We pay back our investors and whatever our bridge financing or short-term financing was, and then we have long-term, typically agency debt in place. What that allows us to do, though, is have more velocity on our investors' capital. And now I don't have to go out and raise tens of millions of dollars, hundreds of millions of dollars every couple of years because it's stuck in a traditional syndication for 5 to 10 years. I'm able to recycle my investors' capital and roll them into 3 deals in 5 years instead of 1 deal in 5 years. Does that make sense?
It does. Particularly, I mean, I've listened to a lot of your social media content over maybe the last year or so, and I've heard you talk about things that almost sound like you are a wholesaler, or like you think and you probably do because your network is so vast, is you go and you don't want to buy anything unless you can get it at 65% LTV.
That's all
And
we buy.
there's not a lot of people in the industry that say they can effectively use that business model. And
Yeah,
I think part of it could be because like you created the commercial empire, right? So that gives you a lot of connectivity with people that can find you deals. I'm not sure that everybody else has that, but one of the things that I really love about you is that you have this amazing mindset. But go ahead. I'm sorry.
Yeah, well, I think you bring up several points, and we can hit on a bunch of those things. I think in the traditional world, a lot of the gurus out there, they teach go and create broker relationships, right? And what I've realized is, the brokers are selling to people out of Australia and Israel and Canada and California and New York and people who have way more money than what I have, right? And so they're bidding up the prices, bidding down the cap rates, and I just cannot compete with that. So I don't really have broker relationships. I've taken the exact same strategies that I use to find off-market single-family motivated sellers, distressed situations, and I duplicate that in the multifamily. And so all the same things that I did in the single family, I'd drive for dollars. Just like there were houses with tall grass and boarded up windows, I'd look for buildings with tall grass and boarded up windows. I'd dial for dollars. Instead of calling for sale by owners, I called for rent by owners. I'm not interested in renting your place. I'm interested in buying the whole building. Do you have any interest in selling? I Google search apartment buildings, Cleveland, Ohio, and I'd look for the ones with the worst Google reviews. Because they have the worst reviews, that means the tenants were pissed, right? The landlord's not taking care of the property. The city's probably on their back, and they're probably a motivated seller. We did direct mail. We do a lot of outbound text messaging today. That's our big thing. We go and extract landlord contact information from different resources like CoStar and Reonomy and all that stuff. And then we do a text message campaign. We get a great response rate. Maybe not a lot of people that are selling right now, or maybe they are, but at least we're planting those seeds and creating those relationships. So that way, whenever they are ready to sell, we're ready to buy. So we do a lot of that stuff: outbound mail, direct mail, postcards, outbound phone calls, a lot of networking. Where I get majority of my deals is from a lot of social media type stuff. What we do, how we do it. Can I buy a deal from you? Can we partner up on a deal? Can I lend money to you? Do you coach? Do you consult? And open up a bunch of different opportunities. And so what I found is I had all these residential brokers and agents and wholesalers and flippers on my, in this database of emails that I had. And what I realized is I just asked for deals. I said, hey guys, I'm trying to find some more apartment buildings. Send me over whatever you got. And I just told all these residential people that I was buying apartments. And all of a sudden I realized that these residential people, they come across apartment buildings, but they don't know what to do with them. They don't know how to underwrite them. They're not educated on, they just discard those leads. They throw them away. And I bought a 48 unit apartment building 2 years ago this month, actually. It came from a girl who was a wholesaler in the residential realm. She would, put out flyers. Somebody inquired or called her back and said, hey, I'm not looking to sell my house, but I have this 48 unit apartment building. And the girl, the wholesaler, said, I don't buy apartment buildings, and threw the lead away. And all of a sudden, she gets my email 2 days later. She digs up that lead, forwards me an email with this woman's contact information who was selling the building. And I reach out to her. I bought a 48 unit building for $1.4 million in a solid B class area. Put a couple bucks into it. I'm all into it for around $2 million now. We just got it appraised, a little over $3.1 million is what it appraised for. And so this was a lead that was thrown away by a residential wholesaler because they didn't know what to do with it. So all of a sudden the light bulb went off, and I thought, I just need to tell more people what I'm doing. Everybody tries to get into real estate and they're afraid of failure or whatever their reason is. And they don't tell anybody that they're going out and buying apartment buildings. You can't be a super secret agent. You have to tell people that you're out there buying buildings. Otherwise, nobody's going to send it to you. If they don't know that you're doing that, then why would anybody send you that deal? So I would say the majority of our opportunities come from one of two demographics of buyers. One is like a mom and pop owner. They've owned the property for a long time. They sucked all the cash flow out of it, never put anything back into the property. And you do that for 20, 30 years. Guess what? Now you're in a position where your back's up against the wall. You're not financeable. You have to sell it. You got a bunch of deadbeat tenants that aren't paying their rent and living in slums. And so they have to sell it. So a guy like me comes in, buys it for a deep discount, creates the appreciation, turns around like this 48 unit. The other type of person I buy a lot of buildings from are smart, multi-millionaire entrepreneurs who made a bunch of money in some other business. They think, oh, I drive by apartments every day. I could just buy one, right? It's like you and me saying, I eat in a restaurant, or I go to a bar and I drink, so I can open up a bar. It's totally different things, right?
Yeah.
And so they go and buy some sort of apartment building. They're not educated on it. They don't have a partner who knows what they're doing. They don't have local boots on the ground. They don't have a good management company. They didn't interview the management company. And all of a sudden, it just turns into a downward spiral. And now they're juggling their traditional business with this real estate, and they got to let one of them go before both of them go bankrupt. So then they walk away from the real estate. Again, somebody like me comes in, or you come in, buy it for a deep discount, and then create the appreciation. So that's the business model on how we acquire these things.
Yeah. So I'm curious about this. So I heard I think it was a social media post today where you're like, hey, just get your feet wet, do something, like whether it's a 3-plex, a 13 unit, a 25 unit, a 50 unit. Like if your business model is to just buy 100 units plus and you're skipping out on all these deals, you're really missing the boat. So that tells me that you're open to all opportunities that are presented to you. Are you still taking down all size properties?
So I am not. I only buy stuff that's 100 units or bigger. But that's because I started out with an 8 unit, and then I bought another 8 unit, and I bought a 16 unit, and then a 14 unit, and then a 23 unit, and then a 31 unit, right? And then I grew my portfolio big enough. And what a lot of people, they look at me. I have 3,900 units today, $335 million portfolio. Because of the way I built it, I owe less than $210 million on it. So there's a lot of equity that's built up. And I built this whole thing in the past 5 years. They look at me and they think, dude, I'm not playing small. I'm just going to go big. The issue with that is, one, you can't qualify for any financing on a 100-unit building if you don't own a 100-unit building already. The other thing is, you don't have the experience. Like a bad move on a 100-unit building can take your legs out. It can really mess you up. An 8-unit building, a 4-unit building, a 15-unit building, you can get messed up. You're not gonna, but it's not going to make you go bankrupt or completely wipe you out. And the other thing is, you're not going to get a seat at the table to even negotiate on 100, 200-unit portfolios if you don't have any portfolio already, right? Like, they're going to see right through you. They're going to say, oh, you're not qualified to come in and buy this thing. And you're going to have to either latch on to somebody like me who has a big portfolio that you can kind of joint venture with. That's okay. You can do that. But I think the most important thing in business, something that's been working in my favor for the past couple of years that I had no idea how powerful it was momentum. The big mo, right? And just getting momentum going, little victories, and a little bit every single day, taking down some deals. Yeah, it's not the idea. It's not where you want to be 5 years from now, but it's going to get you to where you want to be 5 years from now. You got to build up the balance sheet. You got to build up the portfolio. So start taking down anything until you get up to 100, 200, 300 units. And then guess what? There's going to be a 200-unit opportunity that's a single building in one location that you can then go and buy. And that's going to allow you to then sell off all the small stuff. Like, that's where I've been the past 12, 18 months, is just selling off everything pretty much under 50 units. But I needed that because it was a stepping stone to get me to where I'm going. So just by creating the momentum and taking down some of these smaller deals, it's going to set you up. Like, you don't come across a smoking deal, 65 cents on the dollar on a 100-unit apartment building if you're not already planting seeds across the board on all this other stuff, right? It doesn't just fall in your lap. So you got to go out and just start doing deals, right? Working with private money lenders, getting them acclimated to smaller projects so that way they're willing to stroke a bigger check when you get into bigger projects. Working with brokers, working with agents, showing people on social media. And then all of a sudden, this compound effect sets in, the snowball that you couldn't stop if you tried, and it's just deal after deal after deal. And then it becomes a sorting game. I don't like this one. I don't like this one, and you can really be picky and only go with the lenders that you like, right? You can only go with the deals that you like, the areas that you like, the partners that you like. And so when you're in that position, that's a great position to be in, right? When you can walk away from any deal, you can do whatever deal that you want, but it all starts from creating the momentum, right?
Yeah, that's amazing. So let's take a step back, because you mentioned it very briefly, and I kind of almost wanted to skip past it, but I'm realizing that a lot of people who don't know your story, you mentioned that you've created this whole thing in 5 years, not to mention that you're pretty young. I think you're like 35, right?
34, yeah.
Yeah. So like, how did you walk us through this process of what was going on? Let's start with the scaling and how it happened. And then I'm very interested in finding out more about Commercial Empire and when you decided to start that along your process.
Yeah. So here's the downfall of social media. Everybody thinks it happens overnight, right? And 5 years is a very short period of time. Yeah. But what a lot of people don't realize is I was in real estate, or in some capacity of real estate, for 10 years prior to that. And I was really bad at it, right? So in 2005, when I was 20 years old, I started a painting company with some buddies of mine. In the summertime, we did construction, right? And then in 2006, I worked for one of the biggest home builders as an intern. And then in 2007, I graduated from college and get a commercial real estate license, and I start brokering real estate. 2008, I decided I want to become a real estate investor, and I go through this whole analysis paralysis phase of, thinking I got to read every single book and attend every single seminar. And then I quickly realized that I'm not going to learn how to swim by reading about swimming in a book. I need to jump in the water, right? So I need to go out and do a deal. So in 2009, I bought my first house and got involved in this whole wholesaling and flipping type mindset. A lot of the stuff that you see on HGTV and that kind of stuff. But I did mostly rental property type flipping. And what ended up happening is I came across deals that were really good deals. And I brought them to these buyers, and they're like, hey, listen, I just don't have the bandwidth to take on any more projects. Or I brought them to somebody who's like, I got the money, but I don't know how to do this. I had a full-time job. And they're like, listen, Tim, why don't you do the work? I'll bring the money and we'll come up with some sort of equity split and split the profits. And for, a 23, 24-year-old kid, that was a sweet deal. So that's when I got my first private money lenders. It was on a deal by deal basis. I'll tell you this, I probably gave up about 70, maybe even 80% of the ownership and equity in the first 250 deals that I did. But I knew that I needed to build a resume. I knew that I needed to build like an experience level and get some deals under my belt in order to go and qualify for my own financing, have my own money, be able to do my own deals and stuff. So that's kind of what helped me. Once I had access to some private money, there ended up being two guys who said, hey, we got into our traditional business so that way we can invest in real estate. Let's come up with some sort of partnership. And so I had like an exclusive partnership with those couple guys and ended up working with them exclusively from 2012 to about 2015, 16. And our partnership ended up dissolving. I became a greater asset because I had more and more experience. They weren't willing to bring any more money, but, and it just ended up, like a lot of partnerships ended up going south. So we ended up liquidating about 140 units that I had built up over the 3-4 year time frame, liquidated all that in 2015 and 16, and came to a point where it kind of helped me spread my wings, right? It was like a real heavy weight on my shoulders having that partnership because I couldn't do a lot of other stuff. And so when that partnership folded, I was able to go out and I was like, crap, I got to start from scratch again. But it opened up a lot of doors for me at the same time. So in August of 2015 is when I started building my current portfolio. I had again, those 140 units. I had a small percentage of ownership in those 140 units with those other guys. But while we were liquidating that, I was able to go and pick up this 80-unit building down in Georgia with a new kind of buddy of mine and a joint venture partner. And so we bought that building. And so even though I liquidated 140 units, I had 80 units in my portfolio still, and then I can go qualify. We went and bought some smaller buildings. I bought like an 11 unit. I bought this 10 unit. I bought a 20 unit. And then all of a sudden this 200 unit, a 60 unit, and a 134 unit popped up. And I was able to get financing on both of those. So now I had a portfolio of a couple 400 units or so. It just kept on, growing. I picked up another 20 unit, I picked up this 48 unit. I picked up all these other buildings over the course of a couple of years. And in 2008, in beginning of 2018, I had about 700 units, and another 700 unit portfolio came across my plate, heavily distressed, but it was too big for a lot of the small investors to qualify for. And it was too distressed for what the big guys wanted. Like they wanted to just stroke a check and let it cash flow, right? So this was like a heavy lift. That was kind of the portfolio. It was in June of 2018 that doubled my portfolio and put me up to about 1,600 units. That then made my balance sheet big enough and got me on a lot of different radars where a lot of the distressed properties that were out there that, again, were too big for the small guys, but too distressed for the big guys, I was like the most qualified person to come in and buy those and renovate them. And so had a lot of different opportunities that came down the pipeline. And that's also when I launched Commercial Empire, teaching people how to go out and buy apartment buildings. And so that has been helpful too. It's been more of a direct line of creating people to help source deals and educating passive investors about why our business model is better than maybe traditional syndication. And so it's created a lot of deal flow and a lot of money flow for us as well and helped us kind of grow.
When you say it's different than traditional syndication, what are you specifically trying to point out? What is it that is different about what you guys teach than traditional syndication?
Yeah, so traditional syndication, I didn't even know what it was until I got educated on this stuff over the past couple of years. But so traditional syndication, you guys know traditional syndication. You got a sponsor and a general partner who's got maybe 20, 30% ownership in a deal. And then the equity investors have 70 or 80% ownership in the deal. Here's the issue with my issue with traditional syndication is the equity investors are only paid if the property's performing, right? But they have a lot of equity. So that's a good deal for them. The syndicator is doing all the work, but they only have a little bit of equity. But they're also nickel and diming, or they could nickel and dime with an acquisition fee, an asset management fee, a sponsorship fee, a fundraising fee. Like they can fee the deal to death. And what I don't like about that is that goals are not aligned. Visions are not aligned. I'm invested in a couple of traditional syndications. There's one that I've been invested in for about 2.5 years. I've never seen a dime.
Wow.
I haven't seen a check yet. Hopefully, I keep on getting messages. It'll be done this fall. Yeah, we'll see. But who knows? And that's, I think, the problem with traditional syndication. Now, if the property's stable, if it's good to go, and you got one big institutional investor that's stroking you a check to go buy a $200 million skyscraper, and it's already got management in place, you don't have to do anything, and you can own 10, 15, 20% of that and take some fees, and everybody's good, and they don't need their money back for 10 or 15 years. different story. Traditional syndication works really, really well in that case. For what I'm doing, there's way more work involved in this heavy value add process than what's worth 20% ownership, right? So here's what we do. It's almost like a hybrid of like a debt equity type thing. So what we do is we raise capital. Let's say I'm buying a building that's going to be worth 10 million. I'm all in it for 6.5. Okay. Of $6.5 million cost basis, about 1.5 million will come from equity investors, and about 5 million will come from the bank. Following me here?
Yeah.
What we do is I don't nickel and dime the deals. I just started taking acquisition fees about 6 months ago, and we only do it on about half of the deals. We take a very nominal acquisition fee, just keep the lights on, cover some overhead. We don't take any other fees. No asset management fees, no fundraising fees, no sponsorship, none of that stuff. So occasionally we'll do an some sort of acquisition fee, but otherwise I make no money until the property refinances. So what we do is we raise the 1.5 million. And if the property's not cash flowing, we will actually build in an interest reserve for the investors and make payments out of the interest reserve. And that's part of the all-in of $6.5 million. So it's part of the cost basis. And we make a 10% pref payment to our investors every quarter, regardless of the property's performance. Because investors, there's really two ways to invest if you're an investor. One is a debt instrument where you get a predictable rate of return on your money, and you get all your money back plus a predictable return, but there's no equity upside. The other side of the coin is traditional syndication, where you can invest in a traditional syndication. You have all the equity upside, but there's no predictability necessarily in what your cash flow is. And so what we've done, I understood that. And so I've kind of taken a hybrid and made sure that my investors got both. So we pay them a 10% pref. Anything above that goes back into the operating account and just gets reinvested into the project during the CapEx phase. So while we're doing the value add, and it's very predictable because we know that we can stabilize pretty much any building in 12 to 18 months. I know that I can get this thing cash flowing in 12 months, no problem. So I just need to build a 12-month interest reserve, which is pretty standard operating procedure with traditional lenders. So I was like, why can't I just do that with my equity investors? So that's what we do. And so in 12 months, the property stabilized. Now it's cash flowing. Now I can go back to Fannie Mae, Freddie Mac, CMBS, life insurance company, and I can go and put a long-term fixed interest rate loan on this thing at the new value. Right? It's seasoned for over 12 months. So now the value comes in at 10 million. They're willing to give me a $7 million loan. With that $7 million, I pay off the $5 million acquisition financing. I pay back the $1.5 million of equity investors. And then there's about $500,000 of refi proceeds, non-taxable refinance proceeds. So that allows me to then carve that up amongst myself, any sort of joint venture partners, and the equity investors. The equity investors made a 10% return. They get all their money back. And then they maintain, it's usually around 25% equity in the deal forever.
Nice.
So,
I did not know that.
Yeah. So it's a sweet deal for them. And you're like, oh, well, why would I invest in that kind of deal when I can go and get 80% over here? Well, in a traditional syndication, your money's locked up for 5 years. In one of my deals, we turn it over every about 15 months on average. So I can get one of my investors into 3, maybe even 4 deals in 5 years. And in a traditional syndication, they usually have to sell the asset in order to get the investors their money back. And it's not as predictable of a return. So my investors have a predictable return. There's velocity on their capital where they're in 3 different deals over 5 years. And they have 25% in 3 different deals, which adds up to the same amount of there. But now they're diversified across multiple deals, and they had a predictable return, and they got all their money back, and they're still owning these buildings for the next 10, 15, 20 years. That's what our goal is. Like, I don't want to flip apartment buildings. I think that's just a high-paying job. I want to own apartment buildings long-term and build real wealth, right? Let the tenants pay down the principal balance, let the property appreciate over time, and all of a sudden, that is how wealth is built. So our investors love it.
I bet. Yeah. I was under the impression that once you cashed out, that those guys got their money and then they were free to do something and they would no longer have ownership. So that's really very cool to hear that about your business model, because it tells me, number one, that you are outward focused and you're in this business to take other people along for the ride. I am curious, once you refinance, is your strategy to just hold these things forever, or is it at some point down the road, depending on what your business does or what business opportunities may present themselves, is there a chance that you will be selling these off and doing some other business? Tell us more about your vision.
Yeah. I mean, my goal is to buy and hold deals long term. So, I did a lot of C-class stuff when I was growing my portfolio up to that 1,000, maybe 1,500 units. Since then, it's been all A and B class areas. I don't do anything luxury, but I do some new construction, but it's usually like B plus, suburban type settings, secondary type markets. I do a lot in the Southeast, Charleston, South Carolina, Savannah, Georgia, Panhandle of Florida, all around Atlanta. I have some stuff in like kind of like the secondary type cities of North Carolina and stuff. And so I like those markets, but I like good school districts, safe areas, places where people want to live and like to live, but I don't get into luxury. I think when the market's good, everybody can afford a good, solid B-class housing. And when the market shifts, all those luxury renters move out of luxury and move into more of a workforce, like B-class or A-class workforce type housing. And so we like that insulated area. And I think there's just too much management in the C-class stuff. It's just too management intensive. It needs too much attention for us. So to answer your question, yes, we are selling some of our C-class type properties. I got a portfolio of about 1,300 units I'm considering selling right now and talking to some big groups on that. But everything else, like our goal is to hold it long term. But that being said, I'm a businessman. If somebody comes in and makes me an offer that I can't refuse at a cap rate that I think this thing would never trade at for the next decade, then guess what? I'm going to sell it, right? But our goal is like we're doing such heavy improvements on these properties that the 20-year fixes is when the next round of heavy CapEx is going to be needed. So for the next 10 years, we have very predictable maintenance schedules. We did the windows, we did the parking lots, we did the roofs, we did all the mechanicals, like everything's in really good shape. We harden our properties and put in luxury vinyl tile. We put in granite countertops, even in a B-class neighborhood. We don't do ceiling fans because there's too many moving parts and they break and people hang things from them and all that. So we just do flush mount globe lights, right? They look really nice. They're very attractive to tenants. They're very attractive to potential buyers of the apartment building. And again, it creates a predictable schedule of income for us because of how we renovate these things. And there's not these big pops of unknowns and plumbing issues and all that stuff on our properties because we took care of all of that on the front end. So we don't mind holding on to it. My vision, my goal is to hold on to these things, get a 30-year amortization loan with a 10 to 15-year term, and then let future Tim decide what we're going to do with this property 10, 15 years from now.
Very cool. So I know that you like to do masterminds. One specific story that I heard about you, I think it was you that was telling me on social media, I think it was Instagram, that you had put together a mastermind and you wanted to live, like you wanted to rent a yacht is what you wanted to do and have this mastermind there and be in a kind of a opulent kind of situation and get the whole thing paid for by this process of masterminding by getting some people to do it. But you had this mindset shift because you rented this like $200,000 a day yacht, right? Does that sound right?
It was $200,000 for the week or
for the
like
week.
Yeah.
Okay. So break this down. Do you know,
it was like $100,000 for 3 days, whatever it was, so 4 days or something.
This impressed me, the scalability, but tell us the story of what happened. You got on this yacht and then something happened about your mindset towards the end when you arrived at the harbor.
So I'm going to back up and I'm going to tell you like how it actually all unfolded. I believe so much in masterminds. I got in a mastermind in 2015 and that's what took my business and just skyrocketed. I believe heavily in mastermind and being in groups around people going in the same direction and people with a common future, not just common past kind of a thing. And so I'm in my buddy's mastermind and he wanted to go down to St. Thomas back in December of last year. And so we're staying at the Ritz-Carlton, flying first class. I bring the wife down. So like just hanging out at the Ritz and it's, $1,300 a night. And I'm there for 5-6 days, whatever it was, first class flight. I was like $10,000 vacation, right?
Yeah.
And then it's also, my buddy said, hey, listen, I want to get this yacht and there's 5 staterooms. It's $100,000 for whatever it was, 3-4 nights. I want to offer to you and a couple of the other guys. And would you be interested? It'd be $20,000 per person or per stateroom, And so all of a sudden it was like an 8-day vacation that turned into a $30,000 expense. And one of my philosophies in life is not to say I can't afford something, not to say I got to go save up some more money, trying to get my liabilities paid for. So to me, there's a couple of ways of doing that. One is, you say, hey, 10% of all my income is going to go towards this. And I just have to go make more money. So we have more, my 10% to go towards these liabilities and lifestyle activities. That's one. Number two is the whole rich dad model. Go and buy an asset that kicks off $1,000 a month that then pays for your toys. One of the things that I've done is I've figured out a way to turn liabilities into an asset.
Yeah.
And so what I've done is I thought, this could be a pretty awesome experience. I'm going to have an awesome time. I bet somebody else would have an awesome time. So I thought, what if I invited a handful of people down to the Ritz-Carlton and we just did a small mastermind on the front end of going to my buddy's mastermind. So I just did 2 days on the front end. I did 2 Facebook posts. I said, here's what we're doing. We're flying down there. It's going to be super badass. I'm only opening it up to 5 or 6 people. We're going to have an awesome lifestyle. We're going to help you punch through whatever hurdles you're facing right now. And it's going to be $7,500 per person. 5 people, that's it. It ended up being 6. What happened is 6 people off of 2 Facebook posts wired me $7,500. And we went down there and we did a 2-day mastermind. We met in the morning out by the pool and we just sat around a table and we went around talking about, here's the biggest hurdle I'm facing, and the collective brain power around the table was like, dude, here's what you need to do. Or here's what I did in that situation. And then in the afternoons we'd hang out at the pool. And that's when like really the creative juices start flowing because the drinks are flowing and you're out on a paddle board and hanging out and there's no like structure to it. So you just allow conversation to happen. And here's what I can tell you. Out of those people, the 6 people that came down, one guy was able to save $100,000 on his income taxes in 2019 because he paid $7,500 to come to that event. Another girl launched her own education platform and is making $80,000 a month with the insights that I shared with her, but obviously she did a lot of work on her own as well. Another guy, I gave him my securities and my PPM docs so that way he could duplicate those and he started raising money. Another guy raised over $300,000 of private money from some of the insights that he learned in that 2-day period. So there was a massive return on investment for these people, right? Huge return on investment, worth every dime and dollar for them. And what happened for me is I just made $45,000, $7,500 times 6 people is $45,000. I made 45 grand for 2 days worth of work, right? I spent 2 days with them and a couple of Facebook posts. It paid for my entire Ritz vacation for the $10,000 for the week, plus going on a yacht for $20,000, and it put 15 grand in my pocket. It was turning a liability into an asset. Yeah. So that's lesson number 1. I mean, dude, if you haven't been on a yacht, it takes your level, like you realize there's another level, right?
Right.
We're on this 120-foot yacht and we're floating around the British Virgin Islands and going in, like we would roll into some harbor and all the other boats would just turn and stare at us. And we get on our tender that's bigger than most of the other boats, right? And we go into the bar or into the bay or into the beach and we're hanging out. People are coming up to us, taking pictures. It's just like, it's like a celebrity style, like awesome. Status, right? And so it was cool. I was able to bring my wife and she's never experienced anything like that before either. And then the level of ideas that you get, you're just like, I could take over the friggin' world, right? I can do this. Why aren't we doing that? This is actually where this whole, if you had to make $1 million in 90 days, how would you do it? And that's one of the things I'm doing right now as we're talking is I'm working on making $1 million in 30 days. And the whole idea was actually that seed was planted on that yacht back in December. And so now I'm like, take over the world, right? Here's what I'm going to do. 2020 is going to be the best year ever and da-da-da. And as we're coming into the harbor on the last day, I look over and there's 5, not yachts, mega yachts. I'm talking, these are hundreds of millions of dollars owned by the wealthiest people and hedge fund managers out of New York City. I'm talking like 250-foot yachts, right? Like 300-foot yachts that are just massive, 7 stories. You need 20 people just to run it. I looked up some of the statistics. It's $1 million to fill up the gas tank on one of these things.
Wow.
$1 million, 300 grand a day in operating expenses. Like just insane numbers on these things. You're like, I'm thinking too small, right? Like that was the thing. I come into the harbor and I'm ready to light the world on fire. And then I realize I'm thinking even too small with my ideas that I just got while we've been on this 120-foot yacht for the past 3 days. There's levels on top of levels on top of levels on top of levels. And every level you get to, there's going to be another level. And there's another level of problems too that you're going to have to struggle through and get through and punch through. And that's why masterminds are good. And that's why hanging out with people like you and with people who have a good mindset, who are always trying to better themselves and progress, and they're asking good progressive type questions, and being in that type of a environment just is so supportive and helps you out. So that's why I'm a big believer in masterminds, man.
Yeah, that's very cool, man. I get chills hearing about you talk about it. So I'm a big fan of this gentleman. He's a public speaker and author. His name is John DeMartini. I'm not sure if you heard of him, but he likes to talk about how to affect more people and contribute more on a higher and higher and larger scale. So when I hear you share your story, number one, you're talking about stories that are win, 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 where everybody's winning, but then you're also evolving and seeing things and changing your mindset right as you're telling people the story. So it's very inspirational to hear, hey, maybe I can find ways to scale up and to have a bigger impact. I mean, just being in multifamily in general is already 10xing what you could be doing from single family. And then when you get bigger and bigger, now you're 100xing. And now you start surrounding yourself with people that are getting on yachts, and now you're like 1000xing. So that's really fun and inspiring to have somebody on the show that thinks that way and that is inspired by greatness. So that's really cool. I wanted to commend you for that.
Appreciate that.
So yeah, you bet. I wanted to give a quick shout out to Bakerson, who's my multifamily firm. We've done about 850 units here in Phoenix, and shout out to the Capital Raiser Nation. Thank you so much for listening in. Hope you're enjoying the content by Tim Bratz. And then we're going to jump in. So I want to talk about commercial empire, but before we go there, I have this thing. It's called the lightning round. So I'm going to put on some music once it's edited, and then I'm just going to ask you some random questions, and we'll see how you answer here.
All right.
All right. Favorite vacation you ever took?
Probably that yacht. No. I sailed the Greek islands when I was in college. I was totally broke, but it was like $500, and I sailed the Greek islands with a bunch of friends, and we tied up like 8 different boats, and there were about 40 of us who were studying abroad, and it was like amazing. It was so much fun.
That sounds like a blast. All right. So your favorite personal development book?
One that I read all the time, every year, about twice a year, is called 12 Pillars by Jim Rohn.
Oh, cool. I haven't heard that one before.
Yeah, it's a kind of a sleeper. Not a lot of people have heard of it, but it's very impactful.
I'll check it out for sure. So a quick answer on this. How do you scale in real estate faster?
Focus on finding deals, focus on finding money. You do those 2 things, you can do deals no matter what's going on with the economy. And I think you build your net worth by getting your hands dirty. We do heavy value add type projects. We don't have to wait and hope for appreciation. We're creating the appreciation by the sweat equity we're putting into these things.
See if I can catch you off guard on some of these. Have you ever experienced a miracle or near-death experience?
Yeah, last June, crazy story. I was at a mastermind. We're golfing at Firestone Country Club, which is one of the nicest golf courses in the country. It's outside of Cleveland, Ohio. And we were golfing on the 4th hole. We were kind of in a scramble, and a buddy of mine in my foursome was on one side of the fairway. My ball's on the other side of the fairway. I'm a little bit ahead of his, like a 45-degree angle, and we're both hitting that way. I'm like, hey, talking to my cart partner, I'm like, hey man, grab me my 8-iron, whatever it was. And all of a sudden, I just get and I got smoked by a golf ball going 100 miles an hour and hit me right here in the mouth. It knocked out all my front teeth, shattered my upper maxilla bone. I had about 25 stitches on my lips and in my gum, just completely wrecked. And so I fall down and I'm like, oh man, I see all this blood rushing. I feel my teeth dangling out of my mouth.
Oh, crazy.
And I'm looking down at the fairway and I'm like, damn, this grass is really well manicured. It's absolutely like, they do a good job here. And I'm like, how could I possibly be positive while my teeth are dangling from my mouth? I go, thank God that it hit here and not here, not here, not here. Like I could be blind, I could be dead if it just hit a couple inches higher than it did. I get into business mode whenever crazy stuff like that happens. I'm like, all right, let's find a 24-hour dentist. Let's put my teeth back in. Let's get it all stitched up. Let's, whatever. Let's figure this all out. And so I end up going to the clubhouse as I'm rinsing out my mouth and Google searching a 24-hour dentist with my buddies who are my foursome. One of the workers from the clubhouse comes down and says, there's 2 dentists dining in the dining room upstairs. I go upstairs. They leave what they were doing, take me to their dental office. They call up their buddy who's an oral surgeon. He leaves what he was doing, comes out, he puts my teeth back in, puts this bracket across my mouth, saves 3 of the 4 teeth that got completely knocked out of my mouth. Crazy story, but
that is insane.
Yeah, looks good. I got a little bit of scar tissue in my lip. You can't really tell.
You've been very positive about the whole situation. It's very inspiring. Okay, favorite aspect. I know. Favorite aspect of being a real estate mentor?
I like helping people see themselves as more than what they can see themselves as right now.
Yeah.
Right. And breathing some inspiration into people and like really watching their eyes light up and be like, dude, I could do this. Right. Like, I think that testimonial of saying, hey, if this kid from Cleveland, Ohio can do it, I know I can do it. Right. And if I did it once, I know I can do it again. I think that's a powerful testimonial.
Okay. So where do you want to travel to that you've never been?
I want to go to New Zealand and Australia. Never been out that way, but I don't really want to get there though. Like that's a headache. So I'll go there one time. African safari would probably be number 1 though.
Very cool. And then last question, how long do you want to live?
I want to live as long as I am able and capable and as long as I have a quality life.
Put a number on it.
90 years old.
Very cool. All right, cool, man. Thank you for entertaining me on that, dude. I love that. That story about the golf ball is crazy. I've heard you talk about it in some places on social media. Pretty crazy. All right, man. So let's jump into, I know that you wanted to talk to, I'm very curious also about commercial empire, particularly the business side of it, but whatever you want to say, what people, why do they come to that? What is it that you have to offer that some other guru doesn't have to offer?
Yeah, one, I appreciate you letting me even talk about it. I know that wasn't even part of the thing here, but part of the reason I came on here, I just wanted to help, connect with you. And I know we've been connected for a while, and
I like to
I
promote
appreciate.
everybody on the show,
Yeah,
whatever their business.
I appreciate that. Listen, I'm an operator, right? Like secondary is the education side of things. And I remember early on when I was just sharing information and sharing content, walking through properties and doing Facebook videos and taking pictures and stuff of renovations on apartments and talking about how I structure deals. I get so many messages of people be like, dude, thank you so much. I had that was the missing puzzle piece. And that was the last key on the lock that I needed in order to just unlock this thing and get me to that next level. And so it was just like, I had a lot of people asking me if I'd coach them and mentor them, and I just never really wanted to do that because I've been to all the courses, right? Like I've been to the single family stuff where it's like, take your credit card, run to the back of the room, and it's only 10 people, and all that stuff. And it's just dirty, right? I just didn't like the feeling of it. And so a lot of people have even approached me and saying, hey, we're an education business. We need a guru and da-da-da. And I said no to a lot of them. And then there were a couple of guys who had a publishing company, came very highly recommended from good friends and mentors of mine in the business, said, hey, if you ever want to do this, these are the guys to talk to. And our values aligned, our morals aligned, everything went really, really well. And so we decided, hey, let's put together a coaching program, and it's going to be all content driven. The only upsell we have is like a mastermind. We have a mastermind. We have some like partnership, do it with you kind of boot camp kind of stuff, but it is so heavy value driven. We've had so many amazing stories of like the results that students get are just off the charts, and the reviews that we get are just off the charts. People come up to me all the time. They're like, best event I've ever been to, man. It's so good. It's all content. The caliber of people in the room are so high level. It's amazing. There's a ton of money, ton of the best operators in the entire country are in there. Again, it's heavy value. So we go over how to find off-market direct to seller deals, right? All the different strategies and ninja tricks we use in order to find motivated sellers and distressed properties. How to fund it. Like one of the big things that's changing right now is bridge financing is just non-existent. You got to get creative financing. So we talk about master lease options. We talk about installment contracts. We talk about seller financing. We talk about all sorts of different stuff, different ways to creatively structure and take down a deal. We talk a lot about how to raise private money and how to set that all up, how to stay SEC compliant, all those different things. And then we talk about how to do all the due diligence, how to take down the deal and actually do the closing, go through the whole value add process, stabilizing with quality tenants, putting good management in place, and then all the different exit strategies. If you want to wholesale apartment buildings, we talk about that. If you want to flip apartment buildings, you can do that. If you want to hold these things long-term and refinance and put long-term debt in place, we talk a lot about that. That's really the heavier portion of it. And then I bring in my team of 8 players. So like my COO comes and talks about operations. My director of acquisitions talks about how he acquires and looks at 400 deals a month in order to buy 1 or 2 of them. My commercial mortgage broker's there, like people who are on my power team, my CPA, my estate planning attorney. I even have some of my private money lenders that are on the panel. Like I have everybody who helps me do deals sitting there and helps me build my business. It's completely transparent. We don't hold back anything. You know how you go to some of these things and there's always gaps and there's always holes and there's always like, they're holding something back. They're not telling me something. Like open book. Any questions anybody's got, we answer them in full and help people out. And what we do is we partner with students. So there's a lot of people who come out that are like, hey, I love what you're doing. I just need access to capital. Tim, will you sponsor my loan or will you bring money to the deal? And we invest in those projects if it's a good project, right? We're not going to let anybody do a bad deal. And there's a lot of people who are like, hey, I love what you guys do. I have money or I have access to money, but I don't want to do the work that you guys do. Can I just invest with you guys? And we have a lot of people who partner with us in that capacity as well. So it helps everybody do more deals. Like I've said this on multiple Facebook Lives and stuff, that I'd rather have a quarter of a watermelon than 100% of a grape. There's a lot more juice in the squeeze of a quarter of a watermelon than in a whole grape. I think wealth is abundant. I don't think there's any limitation to it. It's like sunshine. Ruben, you getting sunshine takes no sunshine away from me. So it's a cool way that we can all just do more deals together and build more wealth together. And in that scenario, 1 + 1 = 3.
Tim, from an operator standpoint and as the owner of the commercial empire, is there a specific aspect, do you think that this is helping you build that momentum that you were talking about earlier to help you do more deals?
Yeah, I think it definitely brings more deal flow and it brings more money flow. Absolutely it does. And that's really the reason why I do it. It's not because I make money from doing the like
Right.
we make a couple bucks, but it's pennies, it's pebbles compared to the wealth that we build in doing deals. The goal is to get more deals out of it and help other people get into deals, and we can get into deals that we couldn't have gotten into before, and they can get into deals that they couldn't have gotten into before, right? Because we're able to balance out each other's strengths. And so it definitely helps. But I will tell you this, you don't have to have a coaching platform in order to drive more deal flow and drive more money flow. You can have a podcast, right? Like what you're doing. Even if you don't have a podcast, you can just go on Facebook or social media and just post about deals. You can post about strategies. You can do a Facebook Live. And whether it's you giving the content or somebody else, you can interview somebody else to bring great content to your Facebook page, which then is going to drive people and give you credibility, give you respect in the community. And all of a sudden, they're going to look to you to invest with you because you brought on an awesome CPA, an awesome securities attorney, an awesome mortgage broker, an awesome operating partner, an awesome contractor, an awesome whatever, you know? And so there's a lot of different ways that you can convey value and contribute and give and make it a positive impact. And, you know, you don't just get what you give, you get much more than what you give.
Yeah, I dig it. I've had a few people come on, or at least ask me, hey, can I sponsor your show? We'd like to have a commercial or a piece, you know, some kind of advertising. And I've always said no. Like, first of all, I don't want to compromise the integrity of my interviews. And in addition to that, like, how about this? I came up with a solution. How about you do a segment with me? We provide value for people, and then I get to hang around with capital raisers. Because the honest truth is, I'm going to make a lot more money raising capital than I ever am off some commercial that I do on my show.
Yep.
Awesome, man. I've loved having you on the show, and hopefully we can get you back next year. I definitely would like to come out to Cleveland. I think that's where you have a lot of your events. So any last words for the capital raiser out there trying to figure out how to raise more money from multifamily deals?
Capital raising all comes down to two things. It's trust and respect, right? Can you convey that you are the type of person that knows what they're doing and you have the conviction to get somebody their money back? You know what they're asking themselves? They're looking at you and saying, does this person have the fortitude to repay me my money? Are they going to go work third shift at Taco Bell if they have to make sure I get my money back eventually? And if you're not conveying that sort of conviction and that type of value-driven purpose to your investors, then, you know, you shouldn't be raising capital. So make sure you're doing that. Make sure you have good integrity. Always put your investors first, and everything else will fall in line from there.
True that, man. All right. Well, enjoy the rest of your day. I look forward to staying in touch with you, and we'll talk a little bit after the show right now.
Appreciate having me, bud. Thank you.
You bet, Tim.